Hello everyone and welcome to my more important analysis videos on Thursday the 16th of August with me, Rich Market Analyst at Hantec Markets. We've got a recovery in risk appetite today, not a huge amount, but still there is something to go on because we've had a bounce on risk appetite really with the fact that the euro's higher, you've got the dollar that's weaker, the yen that's weaker, the Aussie is outperforming, and equity markets are higher. That's all sort of points of or paints a reasonably positive picture. But I suppose in the backdrop of what we've seen in recent days, it doesn't really show a great deal because what we have seen is that increasing dollar strength in the last few sessions, and that's a real impact on emerging markets. Now you can see the fact that copper, for example, is now in bear market territory. It's fallen over 20% in the last, well, let me put that crosshair there, from June. So in the last sort of 6 weeks or so, it's fallen over 20%, and it's a little bit higher today. Little bit of an early rebound today, but nothing too significant, and that is sort of reflective of the fact that we've got that mild improvement in risk appetite. But again, does it really do much? Well, the driver behind the move this morning has been pretty much the Chinese yuan, which has unwound and improved slightly against the dollar, dragging the dollar yuan rate back below 6.9% on the offshore rate. And that's come as the suggestion has been that China has accepted an invitation to go to, or the Chinese trade delegation has accepted an invitation to go to the US to discuss the dispute further. And that sort of hints at a mild thawing of the dispute tensions, but to be honest, it's not a great deal that it's going to really do, and I think ultimately that's probably why we've seen a little bit of an improvement in sentiment rather than a sizable move. Now we've got significant dollar long positions to still unwind, but I think it's just sort of around the edges at the moment. I don't think it's the beginning of a significant rebound in sentiment. We had Wall Street that was lower again yesterday, but off the lows of the day. That has again sort of helped to play into the rebound that we've seen in the European markets today on equities. But generally speaking, it's just a mild correction on the dollar and nothing yet to really suggest any sustainable turnaround, I think, in the trends that we've been seeing in recent days and weeks. So, in terms of data to look out for today, UK retail sales is the sort of main data point that we need to watch, and that's out imminently. And that is expected to show an improvement, a slight improvement of 0.1 on ex-fuel basis on the month, and then that's just sees the year-on-year data around about 2.8%. Into the afternoon, we've got the building permits and housing starts. Again, slight improvement in building permits, slight improvement in housing starts, and then we've also got the jobless claims, again around normal levels, sort of in the low 200s, and the Philly Fed Business Index at 130 as well, expected to just be still pretty strong at 22. So that takes me to my chart today, which is the Aussie yen. Now, you look at the Aussie yen as a classic risk on, risk off indicator. We had in the last sort of, well, certainly since Friday anyway, but in the last week or so, we've had a strong move to the downside on Aussie yen, and that has now broken this trading range that we've been in, 400 pip trading range for the last 5 or 6 months on Aussie yen, broken to the downside below 80.50 on a closing basis in decisively lower yesterday. Now we've had a slight rebound today as risk appetite has improved, but I think this is now just back into a load of overhead supply that we've got between 80.5 to 81 area, and I think that's another chance to sell. And it's as I said, the market has sort of hit a high of 80.70 around there today, but to be honest, as I said, I think that is just unwinding and going to renew downside potential, because ultimately I think this is a breakdown. I think you see the Aussie yen rate that is still sort of tracking lower consistently over the past year. This range breakdown takes the market to the lowest level since November 2016, so over a year and a half there of lows, and I think it on the closing breakdown of this range, we see the market now likely to start to move into a new negative phase in the medium term basis. The moving averages are all falling in bearish sequence. Momentum indicators taking on a renewed bearish configuration. I think this rally is going to be sold into and is going to be used as another chance to sort of get short again, because I think it ultimately is going to be going lower. So with that in mind, I wish you good luck in your trading, and I will speak to you later.